Hey everyone, welcome back to another episode of the Two Idiots podcast. This is your host Ravi, and on the other side is my wonderful co-host Ruben. Hey Ruben,
Hi everyone. Yeah,
how was your Sunday?
yeah. Sunday not bad. Yeah.
So this is the second video we're recording today, isn't it?
Yes.
Yeah,
So yeah, we are actually doing this on the request of our viewer. So yeah, they want us to do the DCF for Tesla. So yeah, so let's just do it. Yeah.
that is absolutely right. And guys, if you have requests for DC evaluations of other companies, please leave your comments below. We'll be
Yeah.
happy to take a look and do DCF
Yeah.
evaluations for based on your
Yeah.
request.
So you have to comment below and also you have to like it. So we will do. If you don't like it, then yeah.
Yeah,
Yeah.
I agree. Anyways, so let's jump into today's topic. Today's topic is going to be the discounted cash flow valuation of Tesla, a very, very hot stock. So let's get into it. So give me a second. I'm going to share my screen. Okay, so we always begin with the growth rate. And Ruben, we're taking 35% for the first 5 years. Do you think that's reasonable?
Yeah, I mean, given what they're doing, so this is actually like, yeah, it's reasonable. Yeah, they can achieve it. So yeah. So
Wonderful.
they are in different markets, right? Not just in EV. So they're also into energy. They're also into the human labor replacement. So they're a lot of stuff.
Mhm.
So all these are like gonna grow. So yeah.
Got it. Okay, so and for years 6 to 10, we are assuming a growth rate of 25%. The assumption is that, Ruben mentioned all these optionalities and adjacencies where the robo taxis product is coming out and they're going into a robotics vertical. They're going into insurance and so on and so forth, and also energy. So the idea is that as these products start scaling, Tesla will have to reinvest a part of the cash flows. So what this means is in the year 6 to 10, cash flow growth is going to decelerate a little bit by 10% to be precise, relative to years 1 to 5. So we brought it down by 10%. That's why you see 25% here. Now the discount rate, which is nothing but the return that we are expecting from the stock, I've set it to a very reasonable 10%, which is what the market averages are roughly for the last decade or so.
Yeah.
And the terminal value, Ruben, we are assuming that
So yeah, it's Tesla, right? So they have the strong moat around their business. So yeah, we just go for the one that we use maximum, 25.
absolutely, yeah, we still didn't want to go very crazy on the valuations. We are assuming something pretty reasonable. 25 times free cash flow is definitely achievable for a company like Tesla. Okay, so year one cash flow, as usual, we pull this from Morningstar. You can also get it from the 10K or the investor relations report. And the same goes for the excess cash on the balance sheet. At the end of 2021, if you crack open Tesla's books, you'll see that they have roughly $18 billion in cash sitting idle on the balance sheet. Okay.
Yeah.
So next part is the actual projecting out the cash flows. And this is simple. So for years 1 to 5, we take this value of 17.7 and we grow that by 35%. All right. And years 6 to 10, we take this number 15.6, which is the year 5 free cash flow, and we grow that by 25%. So that's how we get this. And once you have all these numbers in place, we are discounting these free cash flows back to present value, which is their value as of today.
Yeah.
And last but not least, remember guys, we are assuming that at the end of year 10, we can sell the entire business, let's say to private equity, for 25 times this number.
Yeah.
Yeah, so that nets you roughly 1.2 trillion, right, Ruben?
Yes. And
Yeah,
then and then on the other side you have the current value of the 1.12 trillion.
yep,
Yeah.
which is 459 billion. So if you add all these guys up, you will end up with 565 billion. That's the present value of all the future free cash flows over the next 10 years. And as we saw above, cash, they have roughly 18 billion sitting on the balance sheet. And the debt number, again, we pull this from Morningstar. You can get this from different sources. Okay, so So finally, let's look at what the entire company is worth as of today, based on these growth rates and cash flows. So that will be the present value plus the cash on the balance sheet minus the debt of roughly 9 billion, which nets us $574 billion for the company.
Yeah.
Shares outstanding, we pulled this from the 10Q. So that's 1.13 billion shares. And
Yeah.
that nets us a value per share of $507. Let's just call it $508. Now, if you look at the current price, Ruben, it's 809 as of market close on Friday.
Yeah.
And the conclusion is we think that the stock is 60% overvalued.
Yeah.
This is not a buy from us at the moment.
Yeah.
Certainly not.
Yeah, but yeah, so as Warren Buffett say, the bubble can go on for a long time,
Yeah.
But the thing with Tesla is, if this thing goes on for a long time, the fundamental business corrects itself to justify the valuation. So yeah, this is after split, right? So they did the 1:5 split, right? 1:5 or 1:4?
I think it was 1:5.
Yeah, so then it's 2.5K currently, compared to the price it was before the split.
The pre-split price.
Yeah. So people were thinking that 2.5K, it's all crazy numbers, but now it actually justified that valuation currently. So now it's going at $800, but it will eventually justify. That's the thing with the tech company. They always factor in.
So wait, are you claiming that they'll grow into the valuation?
Yeah, that's what I'm saying. Yeah,
Okay.
they will grow into that valuation, even though the bubble go on for a while. So eventually, the business will justify that valuation. So that's the thing. So yeah.
Interesting. I have a slightly different view. I just think that a valuation can be very disjointed from the reality. But let's just agree to disagree.
Yeah.
Yeah, I mean, so as always, Ruben, at the end of a valuation, we look at what the market is pricing in.
Yeah.
So, let's just play around with the numbers. Let's set this to 50 and 40. Okay, that overshot.
Wow. Go. 40 is also too much. Yeah.
Too much. Okay, let's just call it 35 and 35.
35.
Maybe let's
40, 35.
40 and 35.
Yeah, so 38 something.
30.
Yeah.
38.
Yeah. Wow. No, instead of 40, just make it 38.
Yeah, that's pretty close, right?
Yeah.
In fact, I think if you key in like 36 for this, that should get us there. Yeah, I mean, that's pretty close, right?
Yeah. So yeah, if they grow at a higher rate, then yeah, it's definitely. So if you open that Tesla shareholder deck, that you have in your last tab, the one before last tab, on the right side. Yeah, this one. Yeah. So if you look into their financial numbers, so the cash flow has grown significantly, compared to last year.
Yes, I agree.
Yeah. So I think this is for Q over Q. Just go to the next one. Yeah, this one. Yeah. So here, this is year over year. So yeah, it was negative, and then yeah, it's just started exploring.
Yeah.
So the numbers that we assumed were like it's not even reflective of what it happened in the past.
Yeah.
So yeah, eventually, yeah, this is how it justified, grow into the valuation basically.
Okay.
Yeah. So, assume that when the free cash flow was -3, no one would have guessed it, right? It's gonna go to over $1 billion next year. Yeah, so it's just too hard for a high growth business.
Absolutely.
Yeah.
So yeah, I mean, that's about it from us. But
Yeah.
before ending the video, I also wanted to point you guys to valuation of Tesla by one of our favorite valuation professors, Aswath Damodaran. So this is the presentation. You guys can go and take a look. Aswath Damodaran does it in a more detailed manner. So he looks at a lot more variables. See, like for like normal people like us, Ruben, I think there's a very complicated way of doing it.
Yeah. You just don't want to complicate it. Yeah.
Yeah, like the way Professor Damodaran does it, he tries to forecast revenue, the margins, the tax rates. This is just too complicated. It's getting into like very complex territory, and we just want to stay away from it and keep it simple. But anyways, that's about for today. As usual, I'm going to leave a link to this in the video description. Take a look, shoot your questions to us, and let me say this once more. If you want us to value any other companies, please reach out to us, and we'd be happy
The
to.
comment section and then like the video. Yeah.
Absolutely. Yeah. All right. Take care, guys. Have a great week ahead. Signing off. This is Ravi and my wonderful co-host Ruben.
Thank you. Bye.
Bye.